market is all-time high round. So what is the things that it should do or should not do? What is the 5 do and 5 don'ts? Some of the YouTubers or some of the content creators right now is riding on this market all-time high, and they have been sharing like buy before November, 5 growth stock. It's time that people buy on this company, 5 cheap stock. All of these content creator, a lot of time they are working with the algo, and then they know humans, people would like to watch this kind of content. Me myself, also a YouTube content creator, I also have the urge to create this kind of video. But also depends on what community you are in. So for example, in Singapore sphere, right? Or if you watch Do It, or if you watch Matrix, or you go AG, you better investing. So all these will have their own content creation. So this YouTuber scenes, but in our YouTuber scenes in Singapore, people are calling out bubble, a worrying sign, and people are calling out there might be a crash that happening soon. So preparations is crucial. Whether or not it's crash or no crash in the immediate or long, will it happen in 1 year, 3 year, 5 year? No one knows. But we have to be prepared. Right. So I like to share the things that I learned, especially the post-COVID from 2020 to 2021, 2022, 2023, 2024 until right now. Don't be overconfident. Some of the companies that you have invested at point of time, there's some big news brewing up and it's supposed to be a positive news. And because of positive news, the share price went up. And I thought, wow, I'm good in this. I can spot like trend. I can know where's the good time to invest. And then my paper portfolio makes money. This is the companies that I invest previously. It's called Huya. It's a live streaming gaming company in China. So back then, people are locked down, COVID, people are bored at home. That's why people play a lot of games. And then some people don't play game. They watch other people play game. And when they are watching other people play game, they will reward them buying some credits token to reward them. I thought I know a lot of things. But in fact, after investing in this, I find out that actually I don't know much about this. And then in a sense that I thought, hey, the top two live streaming company, if they merge, right, it will be the biggest. And then in the end of the day, I thought make money. Never mind. I hold on. Drop down. I thought it's just some pullback because the merger is happening, not happened yet. But it's too bad the merger is terminated. And what's even worse than that, there's a game time limit for the China young crowd. And of course, 2022 market winter, the share price just tanked like nobody business. So I thought I'm good. I'm in the community. People are looking at it. I'm making profit. First thing, don't be overconfident. So always have to be humble in front of the market. Second thing, don't forget about your values. So another company that I invest back then is a game publishing platform. It's called Unity Software. If you like to play VR game, Unity Software is not a foreign brand to you because back then I also buy VR goggles, like the Meta VR goggles. And I thought, wow, 2021, because of metaverse, you don't want to go outside and play game. You want to in the meta world, play in your own room, have the interactions in the virtual world. And I thought this is the way whereby people will change after COVID. And I invest in it. And of course, this Unity software also create indie game. And what's more than that, they also invested in the company that produce like Lord of the Ring in New Zealand, WETA, WETA. I thought, wow, this is a very high potential company. Before like COVID, right? There's this principle that I thought I should not cross. Actually, she right, don't forget my principle. My principle is don't invest in gaming company. And many reasons why I thought gaming company shouldn't be a company that invests is because a lot of time I thought gaming industry have a lot of like toxic culture, and all this toxic culture is not healthy. That's why there's problem on employee retention. There's a lot of employee abuse that happen within the company. But because I thought I know this company and thought that there's this thing that is different, that's why I still invest in it. In the end of the day, I lost more than 70% from my initial investment. So the conclusion that I get right here is don't forget your principle if you already have one. And more important thing right here, any of you who follow or you have some newsletter that you receive or even Mumu will send you some of the companies that you may not have watched before and you may not understand them before. Over the past few months, I also do my best to share some of the companies, some of the insights, some of the studies that I got from all these different sectors. Like for example, nuclear power, rare earth. We also talk about like lithium. The objective is not invest into it. The objective is to see whether is this a circle of competence that we like to build up and to deepen our knowledge or deepen our appreciation of the industry. Don't FOMO. In Chinese, we call if this is not in our circle of competence, a lot of time we couldn't make a good investment or make profit out of it. And yep, this is very important. Don't focus just on stock price. There's the market fluctuation. This is price. And bottom is revenue. You see this company, their revenue every quarter keep growing up. If this business can keep continue generating revenue, right, most likely in the end of the day, the share price would follow. And this company is none other than Palantir. Back then, the share price fluctuate a lot. Of course, there's some overvalued time, but more importantly, focus on the business fundamental, business revenue. Not just revenue, but also quality of their revenue, quality of the business, and quality of the management. And don't penny wise, pound foolish. Because of $125, I missed out a gain of $7,000. This is per share basis. Per share basis, it's out $7,000. So per 100 shares, 7,000, and per 100 share, 125. So what I did a sell call. And when I did a sell call, the share price is 110. I thought I leave enough gap of $150. So it's like close to 20% price increase. I thought I leave enough of gap, I leave enough room. But too bad, the share price went ahead, and then the sell call got exercised, and then I have less 100 of these shares. And then if I hold on the 100 shares, I will have 7,000 more. So if I got 500, yeah, is 35,000. So don't be penny wise and pound foolish. Luckily, I didn't sell every shares lah. I just sell one contract right here. I take full responsibility on these actions I take because at the point of time, I really thought 20% is hard to grow in 1 month's time. But market teach me a lesson. And a lot of time, after we find out what happened, in the end, it's really rectified the mistake. So for me, I realized I made a mistake in like Unity software. I admit it because like I FOMO. I thought this is the metaverse. I should invest in it. I thought I learned enough about the industry. I learned about gaming, but in fact, I'm just a newbie in gaming industry. So I cut loss lah. Yeah, I rectified the mistake and put this remaining amount into other investments that I thought make better profit. And sometimes it's not mistake, it's just judgment. I believe some of you who have followed me long enough know that actually I'm a Salesforce ex-investor. I hold it long enough and then hope that through AI, through automations, it can help people recognize the value of the companies that create for their clients. And I thought with AI, it helps the business better. But back then, I think I discussed CAF before. I also realized another company called ServiceNow. So back then, like the time called VIS lah, we submit 2021. When I learned about this company, there's this pain here because if I invested in that company rather than Salesforce, right, actually I make more money. But yeah, there's always compare lah. People don't compare. So this is Bill McDermott. He is the ex-SAP leader, and then he joined ServiceNow in 2020. 1 year before, I know that he joined like ServiceNow, and his caliber, how he can rally the whole company, how he rally the sales, and of course, ServiceNow back then is just IT, and then they expand to different segment. Yeah, I thought I should stick with Salesforce. Judgment. I've said that long ago that I want to switch from Salesforce to ServiceNow. But too bad. In October 2024, I decided to switch because I find another good opportunity, which is ASML. Right or wrong, who knows? Like Salesforce, they are so-called AI conversion strategy. It works very well in the next 1 year. But I think ASML will do equivalently well lah. Huh? Yep, I should have rectified the misjudgment much earlier, switch to ServiceNow, but I hope that it's not too late lah. Next, remember your strategy. Remember my strategy, all right? I have this conversation with Kev. Yeah, so we talk a lot about our so-called philosophy, our life, but I also remind me some of the strategies or some of the philosophy that I held on, and it reflects in my portfolio. There's some companies we talk about, so for example, Duolingo, or for example, Netflix, Spotify. All this company is great. I love it as well as a user. But because in my earlier investing day, whenever I invest in B2C company, the result is not as good. So that's why I set a philosophy. I should just look at B2B businesses. And why I dislike B2C businesses also because my last experience, B2C, wow, very difficult. But B2B, F&B different. No, I can continue supply oil. Your business close short, never mind. The next incomer will buy oil from me. For example, cooking oil. Yeah, because people like me, I'm not loyal one. If there's a better food other place, right, I will buy better food. So, like something like that. If Disney Plus a show not nice, I go Netflix. If Netflix the show not nice, I go Disney Plus. Yeah. If you tell me Disney Plus and Netflix is the same owner, then different story. It's a B2B business, high switching cost. If there's high pricing power, even better. So for example, CrowdStrike, you buy one service, second service, third service, fourth service. Yeah. So there's high pricing power per se. Okay, sell more. High switching cost. So still force there's high switching cost, but it's hard for their clients to sign more account or sign more services. And of course, software business assets. It's not to say that totally no assets. I like assets like businesses, low debt, and of course, one of the key things that I look at is healthy cash flow. So remember your strategy when you pick a company. What is strategy? For example, you like dividend giving out companies. Yeah, by all means, when you invest, right, make sure that this is strategies that you keep with. Or else you buy companies like Unity, you companies like Huya, they're totally off radar. So that's why I have to remind myself, stick to the strategies unless there is a change in my strategies. And also remember your top 5. People who follow me, you know that actually I don't have stable income since 2 years ago. So I didn't look at adding new companies or new investment into my portfolio. But a lot of time is the companies that stick long and behold with. And right now, I'm still looking at my top 5 as well. Who are my top 5? I have no clear top 5, but these are the few companies that come to my mind. So ASML, Baba, Lemonade, Cloudflare, and C Limited. So these are companies that I've vested and I've positioned into it. So if I have to add, I'll add to the same company. But of course, because of these 3 months, right, I learned a lot more company. For example, the trade desk. So keep to the strategy, keep the strategy. And lastly, do remember, if you are anxious, if you are worried, just breathe because everything is okay. I win some, I lose some, and more importantly, I miss out a lot. I miss out like reinvesting into Meta. I miss out Nvidia totally. But yeah, I do win some. Hopefully, overall portfolio still grow. But in the end of the day, everything is all right. As long as we don't commit ourselves in borrowing, leverage. Don't leverage in portfolio. Why not stick to whatever I have? Because instead of so-called shooting 101 target, why not just shoot at this 5 target that I have confident in? And then I have confidence to hold through the market volatility. You remember? The revenue, business fundamental go up, there's volatility in between. But if you don't look at the fundamental, the volatility will kill you, or the volatility will push you out. I know in our community, right, some of you are looking at dividend generating. Different stage of life, you're more prone to certain investment type or different background or different upbringing, right? You go to certain investment vehicle, investment product. It's all right. It's all right. Start in the way that you feel most comfortable with and then expand from there.
Thanks for watching to the end. If you like this, do subscribe and comment on what you would like us to cover next and share this with your friend who are building their wealth too.